Hey everybody, this is Matt Hammond with IPO Warriors. I got a new computer, which is great for a lot of things, but still getting used to setting it up and realizing my camera was not working. So we're using the laptop's camera, which has this put this funky background up just as kind of a test. Might do something like that in the future. Kind of like it better than showing my anyway, the show must go on, and we've got a bit of a time change difference here as well. So this was an hour earlier than I usually expect. Everything was shifted, so I apologize for that, but I think you guys can adapt. Trading is live. I think some of you are trading TPET alongside me, which has been a very frustrating setup so far. But this week we got a little bit of, or last week we started to get a little bit of an upside move, and I think a lot of us are appreciating that. We can see that. Get there in a second. All right, let's take a look first at. All right, so we can see TPET. Whether you love or hate the company is not really what we're talking about here. Those of us who are trading it kind of believe in the potential for this to get a squeeze. The chart has been pretty rough, to say the least. I don't think anybody's holding from the IPO. A lot of people loaded around $1, maybe up a little bit higher than that. Many of us have averaged down. I'm in down below $1. But really over the last kind of 2 weeks, we've seen this kind of bottom out here at 26 and load back up. Volume stays high. It's getting a lot of chatter. It's getting a lot of interest. And people are asking me, what are the price targets? Let's dare to dream big. I think if we really see any kind of pump in momentum, $1 is the first level it's got to break. Then we have $1.20. This is where there were warrants issued for that $2 million convertible note. If those have not been dropped down to 35 cents, which I suspect they might have, I suspect that might be where what brought us down all the way to 2026. I think they hovered around 40. I think they kind of started selling off those warrants, and eventually those kind of bottomed out at 26. At the upside from there, a lot of people were kind of getting pumped. That first pump here when it went up to 2, I think they were pumping and pitching people in the $1.20, $1.30 zone. So I expect there to be kind of a bit of resistance in here. The next levels up start to be up at $2, and then the IPO price is way up at 3. I mean, that's a long way to go. Is it possible? Yes. Is it unreasonably dreaming? I don't think so. You are smoking a lot of opium at that point, but that's what we got into this for. We believed that this would get the run back up to 3. Is it possible to go higher than that? If we get the kind of epic squeeze type of thing that can happen when all elements of a momentum play align, this could fit an oil trend. This could fit cash flow positive. This could fit another, catalyst. This could be a short squeeze. If all those things align, who knows? I think if you do hold all the way to 3, you really got to start thinking about at least locking in a substantial amount of your position for some profits. But it's kind of a controversial one we've been talking about. Is it a trash company? Maybe. Have the CEO, the current CEO and former CEO been involved with massive pump schemes? Yes, that's why we're playing it. So I'm not going to spend too much time on that one. From last week, we had MNR. This was a bit of a different IPO. It had units that weren't warrants. They instead were like profit sharing shares, basically. But yeah, they're shares nonetheless. And priced at 19, opened at 19, gave a brief window of opportunity for allocation holders to sell out for, to either get their money back or take a very slight profit before it just knifed down. And from there, it was starting to look pretty bad. It was down to 18.50. Not a huge range of trading here. Still kind of in that 18 to 19 range. If you pick some off down here, The low 18s, maybe nice job, but not enough volatility to really make this an interesting play. So not something I'm going to spend too much time analyzing. That's what we had for last week, I believe. So we can move on to what's on the calendar for this week. Thanks, Trade Fork. So for this week, we've got about 6 IPOs that are, supposedly trying to get onto the calendar. My guess is we don't get that many. It just doesn't seem like deals are flowing at the moment. Seems like we're getting 1 or 2 out per week, and some of these are still a bit early in their kind of attempt to debut cycle. So let's just go through them anyway, because we do get familiar with these names the longer they're on the calendar, and eventually many of them do come, not all of them. And we have sort of seen how they've evolved, how they've changed. Sometimes the underwriters get shifted out. Sometimes they reduce the number of shares. Sometimes they increase the number of shares. All of that can kind of give us a little bit of a hint as to how the public is perceiving these deals, what's going on behind the scenes, and kind of get to know them almost like they each have their own character and personality. So let's take a look. Alpha Technology, ATGL. This one is interesting for a few reasons. One is that it's a Hong Kong company that offers IT solution services. They have 2 million shares in the resale perspective. So 1.75 million shares in the float, or in the offering, 2 million shares in the resale prospectus, 3.75 million shares. It's not so different than WeBuy, which had 3.8 million shares, but in the offering. It just means that they kind of get to control a little bit more of the shares that are being offered in the resale prospectus, which I keep thinking, but we still haven't really seen it. Maybe we have with VSME, that those resale shares could be more easily used in some kind of stealth manipulation play than if the whole float had to be spread out to public buyers. So I don't necessarily see this as a bearish setup that they have resale shares, although we haven't quite seen it run enough times off of those that setup. Be hugely confident in it. At the same time, it can also mean that people with a much lower cost basis than the IPO price are free to dump, and that, of course, is the bigger concern there. So let me just set up a few charts here. SPY looking pretty strong this week. That's interesting. All right. So the other things that we talked about for this company are that the C-suite seems to be a couple of fund managers. So these people aren't just focused on their on this IT company. These guys also control some private investment funds, and that certainly bakes the cake for potential shenanigans to be set up. The controlling shareholders, Ma Xiaoqi and her husband, apparently had a company that was banned in China as a Ponzi scheme, but still have operations in Hong Kong. So, I mean, more shadiness. Sometimes shadiness is good. Prime Number Capital, that's an underwriter that's been involved in some oddly successful deals. So I got to keep a close eye on this one. I'm still not really convinced that we have to go out and get allocations for these deals to work. I'm not sure it hurts either. After WeBuy, you bought that at 5 on allocations. It opened at 8 plus and then drops. That's easier to sell the debut at 8 than time and entry after that. If you're holding TPET running to 0.62, that's nice. So I'm a little bit still conflicted on the allocations approach to this. After PMEC and ATPC, was it? After seeing how badly those did, I think there's also the argument for you can just wait and see what these do. And if you want to get involved with them, play the dip or play the entry after the debut. it's just we're not even getting that much. Not getting that much of a hint after the debut either. But I kind of be surprised if we saw things as bad as PMEC. It's just those surprised me at the time as well. So I kind of feel more comfortable waiting and seeing and hearing kind of how allocations are distributed, and maybe miss that pop right off the debut. Instead, see if there's some shenanigans and I can get myself in. Maybe I hear about those later. Maybe I hear about how they're giving the same amount of shares to everybody, no matter how big an allocation you requested. And those are the kind of things where there's a little bit more of the playing field laid out in front of you versus with these allocations, you're kind of going in a little bit more blindly. So other than a small handful of them, the debut premium has not warranted what I would say the risk premium in buying in before the debut. But I do like this one. I'll put this one at kind of the top of the list of things that I like. Healthy Green Group, GDD. This is a Hong Kong organic produce grocery store that has stores called Green Dot Dot. I guess they have them in subways and things like that. It's after I left, was no longer in Hong Kong so much. This was an Amex listing. The filings still show Amex. The Webull, app still shows Amex. We heard they'd been rejected initially, so now I guess they're still trying. Not getting any feedback yet from the the Chinese traders in our group. The underwriter is still EF Hutton. That's you got Hong Kong in it. You got 2 million shares. EF Hutton's shown they're able to do some shenanigan type deals with WeBuy, with Swin. So it's starting to feel like maybe these are worth paying more attention to than we used to. Got to get a little bit more color on this. I think it's actually been pushed that it's not going to be October 31st. But anything tied to Hong Kong with low float, especially if there's no reseller shares, it's got to be something you pay attention to. So we are getting more activity out of the Asia IPOs, and if one of them goes, it starts bringing attention to the next one. Kind of got to go with the trend here, and if the trend is showing deals that work, deals that run, you just got to try to be cautious of the downside on the ones that don't. If it really starts falling out below issue, kind of feels like if it can get above and stay above issue price, it's got a good chance of going for a run. But once they fall to pieces, they're done. We haven't seen much of a recovery yet in PMEC or what's that other one? ATPC. So those are the cautionary. There's a cautionary tale for every success story. But if you really go back and look at them, they've had more runners than than the 2 or 3 with GPAC, ATPC, PMEC. Those are the 3 that all in the same week just kind of fell apart. I'm not saying we haven't had others that did badly, but we did have kind of a cluster of those right during Chinese national holiday, which really fell apart. So I'm going to move on. Globavend, we've seen this come 4 or 5 weeks in a row now. This is an RF Lafferty deal. It's an e-commerce logistics provider with primary operations in Hong Kong. I just feel like we haven't seen Lafferty's deals really catch fire. They've brought Chinese deals. They've brought deals that just weren't, we haven't really seen one rip. So I think that unless they're able to ride the coattails of something else, it's a little bit of a stretch to expect much from the deal itself. Topically, it's Hong Kong. It's 1.875 million shares. If I saw a bunch of prime number, I'll have to go back and check that one. Tradefork asked what was the last big prime number runner. I don't know. It might go all the way back to, and maybe it goes all the way back to the HKD era, and I'm just forgetting from there. Maybe they really have just gotten the debut pump, mastered that, and that's all and that's kind of given some confirmation bias. But no, I mean, I would still not put prime number up with like Univest, who seems to be, and actually EF Hutton has had a bunch of runners recently, so they not Snell is kind of far enough in the past, I guess, to say maybe they can run deals. Kind of looks like it. It's hard to argue with Swin, W Buy. I think there was another one in there. So yeah, prime number might be worth really kind of putting back in the show me you can really do something. But I guess the point is, yeah, loss of example gives a nice halt up. So a nice halt up, I mean, that's an easier one to be already in than buying on the debut. Halt up at the debut. Stalls, okay, it gives you a chance to see if it insta halts again. If it doesn't, you just exit. But prime number, when I see those insta halts, when I see opens like that, it makes me think something's going on. Maybe they're just throwing the shoe at it. Better than deals where it just falls straight out the gate and continues to fall and continues to fall. So Lafferty deals, we haven't really even seen the halt up. So Globavend kind of got to put it on hold. If we got momentum in any of the other deals that come before it, we can adjust accordingly. But once you start seeing too many deals come, people start front loading. Kind of not in a great place in the trading cycle unless they can come off one that just goes crazy. But we're not there yet. So I'm kind of less interested than in some of the other deals on Globavend. What's next? Inno Holdings, INHD. This one's interesting. So this one is a Texas construction firm with truly horrendous financials, but it has a Chinese owner, a guy named Dekui Liu, who is an immigrant from China, who came to Texas and set up a steel stud manufacturing kind of construction company. And there are 2.5 million shares in the deal and 1.386 million from selling shareholders. That puts us right at that 3.8 million share, a little bit more than that count that we saw in WBuy, that it seems like a lot of them are kind of targeting. Interestingly, I found a Seeking Alpha article from a couple days ago that basically said short this on open, which seems like kind of a dangerous approach. I mean, if you're going to go short in something, certainly shorting low float IPOs, right after the debut has become a very popular trade, no doubt. But, I don't know if you want to go shorting something like this, and I'll tell you why. The underwriters are AC Sunshine Securities. I don't remember, they've been on some deals. They were involved with LICN, AIXI, SFWL, and TCJH. So Ji Shi says that he looked into Dekui Liu and his mother in Chinese word websites and has not found anything particularly interesting on them. The interesting thing about the underwriter is this AC Sunshine Securities. The CEO is Dr. Ying Cui. She is also the founder of Univest. Univest probably has the best record of pumping at this point, I would say. So, I mean, certainly capable of shenanigans. When you look back at LICN, SWL, TCJH, they didn't really go crazy right off the bat. They kind of came in. We can take a look at these. We've got LICN. Go to the dailies. LICN was a $4 IPO that took, 4, 5, 6, 7 days before it ran up to 580. And as I recall, there was an early morning run maybe higher than this, that is it? Let's try. Okay, yeah. It was a quick early morning run up to 7. But you had to, this wasn't just like buy the debut and get the instant, payout. This was hold for 2, 3, 4, 5, 6, be online in the morning in day 7, and catch your windfall there. So LICN, kind of a delayed run there. AIXI was really a bad one, but it did eventually have its day in the sun. It opened at 680, and it took quite a while. I mean, that was from March 9th through the whole AI, quantum computing, all those runs. I mean, it barely got much of a move from 5 to 6 one day. Dropped as low as under kind of low 4s. You're talking about holding from March till pretty much end of June, end of July, and then you got a run up to 10. I had actually taken a position kind of, I think, around here, thinking it was going back up at 6. It was bag holding and then just got out like pretty much right where I got back in. I think I got out at 690 or something right before it ran up to 10. So the hard part about like when you start holding these too long, even if you're averaging down, which I wasn't really, once you get back to break even, you're kind of like, just take my money back. And then you miss the run that you had been holding for anyway. And then if you got too greedy holding it, saying, yes, this is the run, it's going to 20. Now you end up, you can't, there's not a whole lot of time to give it to go. So these become difficult to trade after they go past about, my limit on these tends to be about 2 or 3 weeks at most, unless I believe in the story, which for most of these is not all that pretty. We can look at SFWL. SFWL. This one did get a run pretty quickly. It went up to 12 on day 2 in the morning. Although that might have been pretty early in. Although, yeah, that was 1 million shares there. So you got, you were in it. If you're in at 4 and you got out on day 2 in the run, that was a nice hold. If you missed that and you got back in, you got another opportunity here. It went up to almost 6. Recently, it jumped up to 1245. It's climbed back up. It's really been a pretty bouncy trade since then. It's hit up as high as 17. That's a long, that's end of March to September. That's a 6-month hold. Not sure that's how you want to structure your trades around this. Point being, there are stealth in these, but doesn't mean you need to go in for a big allocation. Doesn't mean you need to buy the debut. TCJH is the last one. And this one, you had an open at 380, drop down on day 4, it looks like, to 337. You got a bit of a spike up to 650 on day 3, but you really had to wait till about the 18th you had to wait almost 10 days before you got an early morning spike up to 1474. All right, you had $8 going into 9 o'clock. So, that's a long time to hold that. It did run up to about 10. So, seeing upsides in these, just very, very volatile. And then, you missed that sell thinking you're holding for something bigger. And in one day, it fell from 10 to 3 and then down to $1.46. Currently at $1.17. Did have a little bit of a spike here. Okay, so the point I'm trying to make here is this deal has the potential to have some stealth shenanigans in it. Does that mean you need to get an allocation or a debut buy-in? I'm not sure. Almost all of these gave you actually a little bit of a debut discount if you bought the open. And of those, that I don't think any of them for that, that was the ultimate low that you could have gotten in on. So the company looks so bad that you wonder how they're doing an IPO if they're not doing so, if it's not part of some bigger, scheme. So it's got that going for it. It is getting short on open advice from Seeking Alpha. So if they add shorts to something that ends up squeezing, that could get really interesting. I want to watch this one pretty closely, but I'll probably be waiting more than anything, see if I can take a position with it down at like 350, 360. Yeah, I saw that. She said the CFO of INHD has worked for a couple of underwriters, including JP Morgan, Sutter, and Bosted. So I feel like there's probably shenanigans that will play out on this one. I just don't know if we need to pile in on the debuts. So big star next to that one for the watch list. Pineapple Financial. Talked about this for a while. It's EF Hutton. I don't see any ties to China. It's 875,000 shares. Some kind of Canadian loan broker listing on the Amex. And now they're, I guess, back. People were saying on Friday that they're getting a lot of calls from the underwriters trying to get shares into people's hands. I don't know what they're saying on those calls. Most people I've talked to said they're just not even taking those calls, that it's a little desperate when they're calling up to just get 875 shares out. We don't know with all the regulations now if that just means that, look, we need to get shareholders so we can get the deal out the door and then pull some shenanigans. But it's not a great sign when nobody's like, hey, you should take this, wink wink, nod nod. It's not insider information, but these guys tend to have brokers have relationships with their customers, with guys, people like us, and they want to get these shares sold, but they also want to build that relationship. So if they think there's a good deal behind it, they can't come out and say it like, hey, this one's got shenanigans, but they can say, hey, and even they can say cut your bid in half, or maybe go bigger on this one. That's gone the other way as well. So you can't trust these guys too much, but that they can't get 875,000 shares sold to me is kind of a red flag. And there's nothing else about this company I particularly like. Probably the only thing two things that are interested about this are that it's under 1 million shares float with no reseller or reseller prospectus or offer or selling shareholders, and maybe that it's an Amex deal. But if even Amex was like, nah, we don't like this, either the shenanigans are so bad, which would be, I guess, good, or it's really just not meeting the requirements. And I don't know. I can't feel great about this one. Maybe I'm wrong on this one, but I don't like what I see right off the bat. Or just from everybody, I'm not hearing great things about it. Then again, nobody really liked WBUY, We Buy, and that one did really well. So who knows? Shimmick Corporation. This is almost a little bit like mid-mainstream. It's a construction company specializing in water infrastructure projects in California. Flattish growth, negative baseline financial. It's Roth Capital with Craig Hallam Capital. Roth deals, they have worked, but more often than not, I feel like they don't really. They're kind of either mediocre or go down. I have not done well with their deals for the most part. So if somebody comes along and tells me differently, maybe I'm interested in this one, but it seems kind of boring. 4.55 million shares. I don't see retail getting super excited about this, and it doesn't seem like Roth gets too involved with shenanigans. Sometimes there haven't been shares available or something, but that's I haven't heard anyone say this deal is going to be great. And my experience with Roth deals is that they kind of get shorted down, and maybe in the long term they kind of work out a little bit, but that's not that doesn't meet my kind of trading timeline for these deals. So I'm going to hold off on this one. And the last one is Nyiax. We saw this one before. It was coming from Bosted. They added Westpark to the deal, and then Bosted came off the deal, so now it's just Westpark. This is a smart contract provider for advertising that's powered by NASDAQ and the blockchain, which is kind of weird. The technology is jointly patented by Nyiax and NASDAQ. Okay, are we going to say NYX is a financial IPO? I think it's an advertising ad tech. I don't know. They've been trying to do this deal since June 2022. Again in March 2023, I think that meant that to be. Some kind of concurrent exempt offerings of securities, which is like a private placement. Revenue growth way up, operating profit way down, negative operating profit, net income, positive cash flow. I don't know. People weren't too excited about this one before. I guess powered by NASDAQ. I guess NASDAQ, it's not, I mean, the chance that there's shenanigans involved seems kind of low, but then again, West Park brought us other deals that ran, so why not? 1.87 million shares. I need to look a little bit more deeply into what this exempt offering of securities is, but I haven't heard people be too excited about this one. So my focus is probably going to be in digging a little bit more deeply into INHD, GDD, ATGL, because these are where we've seen the big runners come from, and this is where I feel a bit more conviction in terms of, hey, if they get these deals going, this could give you that, that volatility where you're getting a move from 4 to 8, or at least 4 to 6, or an opening halt, that kind of thing, where the trading is less time intensive, and if you do have to hold for a few days or a week to get a pump, and it doesn't come, okay, well, you took your chance. If it does come, you could be looking at 8, an upside of 8 to 12. Those are nice moves. So that's what I got this week, guys. Please share what you find out on your ends in the group. I will come out with the newsletter here today or tomorrow. And good luck, everybody. Cheers. Bye.